Now, Tom O'Brien.
Good day, money masters and treasure hunters. Welcome to the August 14th terrific Thursday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for the day. I'm the morning anchor here at TFNN from 9 to 11 each and every day, and also author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. I hope each and every one of you out there is having a terrific Thursday. Let's make sure that you and I, that we do everything we can do to just simply have a fantastic evening out there. Now, during the next couple hours, I'll be with you for 2 hours. I'm going to share with you extraordinary tools that help us understand where price is headed to. We'll utilize the A to B equals CD tool. That's the lightning bolt tool. That should become one of your favorites. We'll also use Fibonacci expansions and retracements. We'll use Japanese candlesticks, because those are the signs that the bulls and bears make for you and I each and every trading session. This is a call-in talk show. That means you can give us a call at 877-927-6648. Be happy to take your call internationally. You can call us as well, 727-445-1044. And then you and I, we can go hunting for bulls and bears. Here's what I want you to remember. Always remember that adversity causes some men to break. Not us tigers and tigresses, because what it causes us to do is to break records. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading up 54 points. She's trading at 16,706. We've got the S&P up 7 points, traded at 1954. We've got NASDAQ Composite up 15 points, trading out at 44.49. Russell 2000 up 11.42. NASDAQ 100 up 16. Leading the charge, the upside, Perrigo Company, PRGO. She's trading up $9.54, up about 7%. Advanced Auto Parts on the move out here, trading up $8 and change, up about 7%. Amazon up 7.40, creating an island reversal bottom tomorrow. Doesn't get too much more bullish than that, other than the fact that it's going into a huge supply line. But we'll take a look at Amazon. AutoZone to the upside as well, up $7. Actavius PLC, that's up $6. Intuitive Surgical up $4.60 to the downside. VIP Shop Holdings off 6%, down $13. Red Robin Gourmet, a little well done in their burger section out here, off 19%, down $12. Big volume behind that move. I don't know if there's too many people that are in the green inside. Of course, you don't want a green hamburger. Nonetheless, you do if you want to own their stock. You've got Chipotle. Chipotle is off about 1%, down $6. Noodles and Company, another one taking a big, huge hit out there, down 17%, off $4. Pioneer Natural Resources, that's off $4, down a couple of percent out here. But moving in the commodities section, and I'll just touch on it briefly because we got our man Andy Heck up with us in about 12, 13 minutes or so. But oil, light sweet crude, Texas tea, that's off about $2 right now, trading out at 95.61. I'll just share with you one chart, and then we'll wait and get Andy's feedback on it, our commodity king here at TFNN. But here is a weekly chart. Now, it's a continuous contract. But this is so that everything can stitch together. But what is interesting here, as we take a look at light sweet crude, if you were to come back into the time period of 2009, so I'm going to take you back in time to May of 2009, and what light sweet crude has had is a nice bottoming, rising price channel. Well, guess what, folks? As we speak right now for this week, last week it broke through it. This week you're seeing some additional follow-through out there. And so light sweet crude has cracked out there. Now, I don't have the commercial, the CFTC data updated here. I haven't updated it probably since about June 20th. But what I can tell you back then, even in the height of all the political chaos that was going on out there, the smart money, the big money, the large money, the big tankers out there, they were placing their money. They were saying that light sweet crude was going to move down. Well, they have gotten their way, and they have broken through a rising price channel. Now, it's trading at about the 95.60 area. 95.81 on a weekly chart happens to be the single largest primary trading range number. There is where we have the largest number. We're in an area where we have the largest number of opens and closes out here. I would say breaking through that area, that'll go ahead and likely take light sweet crude down to the 70 area. But we'll come back to that maybe in about 10, 11, 12 minutes or so from now when we got Andy back up here with us. Let's go to Vicki in Bradenton, Florida. Vicki, thanks for calling. Thanks for holding. How you doing this afternoon?
Good.
Excellent.
Just wondering about the housing sector. I have stock in Hoverian and Lennar that I just purchased this week. So.
Okay, so you got HOV and Lennar is LEN, I believe. Is that correct?
Correct.
All right, so you're into, so you got Hovanian, that's up 5 cents this afternoon. Lennar is up 54 cents, both up a little over 1%. And tell me your trading plan. So you got into this. Where's your target? Where's your stop? Anything that you could share with me?
Well, I just got into them in the last few days, and
yes.
So both of them are up. And I figured my stop would be at the low from last week.
Excellent.
And I was just hoping the housing sector's on its way back up.
Well, I tell you what, one of the things that you've got is I take a look at the Hovnanian chart out here. One of the things, Vicki, that I like is the trading session from, really 3 trading sessions. I don't know what took place on June 25th, June 26th, and June 27th out there, but you're going to like it because those are nice, big, high-volume bars to the upside. So that should be a target. It would be the natural target anyways because it's a swing point. But in this case here, it's a swing point high, so that is a nice thing. Now, the key question is, has it stopped its move to the downside? Because in the case of Hovnanian, it has been moving down ever since the time period of January in 2014. So as I pull this back, I agree that you should have a stop placed under last week's low. Inside Hovnanian, that would be the low of August 5th, and that's at $3.75. So somewhere tucked underneath that. You're trading right at what's referred to as the point of control. This is a real congestion area right here at the 397 level. You'd like to see it get up over this, and you'll probably run into some resistance at around $4.29. That's going to be your first area of resistance. What I would say, do you utilize any technical tools, charting tools or anything when you're looking at it, or is it more of a fundamental system that you use?
Well, I guess I really don't have a system. I just listen to you guys all the time.
Got it. Okay. So. Okay. All right. Well, good.
But I saw it pull back, and then I went back. I don't have the chart in front of me, but I went back in the weekly chart and to maybe 2 years ago, and looked to see where the spots were as far as lows and what it came back to and where it has the most volume. And then I just kind of, living in Florida, I'm
see
in
a lot
the
of
housing
construction,
business, and I know things are picking up. I own rental properties, but I know things are picking up in that direction here. So I thought maybe now's the time to get back into the housing stocks again.
Okay. Well, as long as you've used the proper position sizing for it, meaning that you're the proper portion of your portfolio, you're in pretty good shape. Now on a weekly basis, and you mentioned a weekly chart, what Hovnanian has done, it's completed a 1-to-1 A to B equals CD to the downside. That price projection was 402. You're trading right at about the 402 level. I like to see some type of reversal signal in here. We haven't seen that most certainly on the weekly chart. And the last week ended July 28th. It had a fairly decent down thrust in volume out here. So the volume is still to the downside. As far as breakout areas, the real breakout inside this equity probably took place all the way back on a weekly chart, back around August of 2012 out there. It was the session following, the week following on September 3rd, where you had your largest volume breakout, and really the following week was where you had some wide price spread and accelerated volume. So here's what I would suggest. If this trade on Hovnanian doesn't work out, look to get back into it maybe around the $3.26 level, because that's where the last real breakout on the weekly chart took place. So okay. I hope that helps you on Hovnanian. We're going to go into a hard break, and then Andy Heck is going to be up. You're welcome to hold. And then after that segment, I come back to you. Or if you can't hold, I'll go ahead and take a look at Lennar for you anyways.
I'll just and let you talk.
Okay, all right. So look forward in the half hour segment at the bottom of the half hour here. I guess it's the bottom of the hour. I'll take a look at Lennar for you. Okay.
Okay. Thanks.
Thanks so much for listening. That was Vicki in Bradenton, Florida. We'll be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom for the evening. Hope you're having a great Thursday. And as we do every Thursday at 20 past the hour, we spend time with our man, Andy Hecht. Now, Andy hosts the Commodities Hour each Tuesday and Thursday from 5 to 6 here at TFNN.com. And he's coming fresh off a great webinar last night, sharing great insight into silver. And why not? After all, Andy is the commodity king. For 3 decades, he was over at Phillip Brothers, which became Solomon Brothers, and then Citigroup out there. And he worked and he was involved with some of the largest commodity trades back in the 1990s. He's also author of an incredible book. You need to have this one on your bookshelf, How to Make Money with Commodities, and also author of a fantastic newsletter service, the Techno-Mental Commodity Report, which you can test drive 30 days for free out here. So let's go to our commodity king, Andy Heck. Good afternoon, Andy. How you doing today?
Hey, Steve. How are you?
Excellent. Thanks so much. Good to speak to you, too. So,
it's been a while. So, yeah, we had the webinar last night, and it went pretty well. And there's still time to sign up. And the stuff in there is very fresh. We looked at silver versus we asked the question, is silver a precious metal or is it industrial metal? And we looked at all the prospects for the future. So I urge people to go and get that webinar for free.
That's great. And all they have to do is just sign up for your newsletter service.
Exactly, and they get a free 30-day trial, no obligation. So take a look at it. Anyway, I heard you talking about oil. Oil is really getting crushed today. And I have a chart up here that I'm going to put up, if you can see it. And what I'm looking at here is very interesting. What we saw here in the run-up in the end of June, with all the geopolitical things going on, the market got very, very long crude oil. We saw open interest rally from about 1.6 million contracts all the way up to about 1.76 million contracts. Mm-hmm. And over the last couple of weeks, that silver open interest has dropped dramatically. I mean, we dropped down from 1.76 million down to, on August 11th, we were down at 1.57. So that really came off. So all of the disappointed buyers of crude oil bailed out, and that caused, that's started the down move. Now, today we're seeing a real plummeting in the oil price.
Yes.
And, it's actually good in two ways. First of all, the products. Let me put up a gasoline chart for you. That's getting hit even worse than crude. So the cracks, but look at that gasoline price. That thing is down almost 9 cents a gallon today. So good for us at the pump.
I'm liking that.
Yeah. Oh, that's good news. Heating oil also. So the products are also down. So there's a lot of things. You see the products are down here. We're down in the products about 8 cents. There's a couple of things going on here. Softer economic news in China, weak economic news out of Germany and France.
Yes.
This is all doesn't bode well for energy markets. So it's kind of a perfect storm here in terms of energy. And in terms of what's going on between the West and Russia, the most powerful tool that the West has is lower oil prices because Mr. Putin depends on those oil revenues.
Yeah, no question. So as you take a look at your chart patterns with light sweet crude getting beat up here, you have any price target areas that you're looking at?
Well, yeah. I think that the next area of support I'm looking at here is the March 17th low, which was $94.34 on the active month September contract. We break through there. We're going to go test the 91.15 level. But, look, I'm always a contrarian. I like to trade these markets to the other side. I don't think that crude oil is going to really, go down very, very dramatically here. I mean, I could be wrong, but what's telling me that is that I look at the spread between nearby crude oil and very deferred crude oil, Steve.
Yes.
So I look at September 2014 versus December 2017. When crude oil was up at around $105 a barrel, that spread was $20.
Okay.
That spread has come into just over $7. That's a huge move. That tells me that some consumers are taking advantage and locking in longer-term prices here because the pressure on the spread is telling us that. The other thing is that a lot of the reason that we're so awash in crude oil here is because these high numbers have brought in a lot of high-cost production from the Permian, from the Balkans, from all these areas. Oil prices drop. It makes this production less economic. So, we have to remember, up until like 2004, the crude oil price never traded over $40 a barrel.
Sure.
Now we're dropping. We're really tanking today, and we're at $95.50 a barrel. So still very high prices.
Yeah, you mentioned that you've got some companies maybe that are out there taking advantage of lining up some oil prices. Maybe that bodes well for the airline industry.
Well, exactly, and I think airline stocks are up today. And that does bode well for the airline industry, certainly, and maybe for lower ticket prices. Listen, this is a tax cut for consumers. You're going to go to the gas pumps, your prices will be lower to fill up your gas tank. Maybe airline tickets will come off a little bit here. So this is all positive news for the economy. A lower oil price is a good thing here.
Yeah, you've got this. I'm just checking in on Spirit Airlines. It's trading out at $69.37, even on a weekly basis. It's going after its highs from July 28th out there. So let me see what.
So you're going to find a lot of oil consumers doing well here. Now, the only thing I worry about with these consumers, consumers are a funny breed. When the prices start coming down, they start, they forget how high they were, and they give up their hedging programs, and that's never a good idea. They get afraid that they're going to buy today and tomorrow the price will be lower. So we'll have to see what happens with those.
Yeah, well, that's a pretty important aspect of owning an airline, don't you think?
Absolutely. It is the key. It's so important that Delta Airlines went out and bought a refinery.
No, I know. And, I was taking a look at Delta. So Spirit Airlines definitely up at its highs. And Delta right now trading into the top of a little descending trend line. But the volume behind the move today, 7.5 million shares is going in a swing point. It's only got 14 million. So it needs maybe a little bit more giddy up and go. Anything else on the commodity sectors that you're looking at?
Yeah, I wanted to show you. I wanted to take a quick look at copper. Dr. Copper. Copper is really hitting the skids today. We're down at $308.90 per pound. We were trading Sunday night. We traded up to $324, so a big move down in copper, Steve. What's going on there is these weak numbers out of China, weaker numbers out of Europe. And copper support kicks in at 308, just below where we are today. I think today's low is 308 and a quarter. Below there, 301 and the old psychological $3 level. But there's some divergence there because other base metal prices like aluminum, zinc, and nickel have been doing pretty well. Basically because aluminum production, nickel production comes out of Russia, and the zinc market's in deficit, and a lot of hedge funds have been loading up on zinc. So it's going to be interesting to see how this divergence within the base metals market plays out. But copper is a very important commodity to watch, just as important as crude oil, because it really diagnoses the global health of the economy.
Absolutely. Andy, as always, great to speak to you. Have a great Thursday. And folks, don't forget, Andy will be up from 5 to 6 tonight. Go sign up for his newsletter service so you get access to his fantastic webinar. Andy, thanks so much for taking some time. You bet. Have a great afternoon. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. And, folks, a couple times a year, we do a promotion here at TFNN. It's called our Tiger Dollar Sale. And it's a great way to invest in yourself. You know, there's nothing like investing in yourself inside of education. And what we do here at TFNN, for every dollar that you invest in yourself, we'll match that with an additional 40%. So you got a 40% bonus in any investment you make in yourself in Tiger Dollars. Those Tiger Dollars are used for any services that we have here at TFNN, all subscription services. So if you are a subscriber to anything, or you're sitting on the fence and you're thinking about it, come on over to the homepage of TFNN. These Tiger Dollars, they never expire, used again for all services here. And right now, the Dow's up 56, S&P is up 7. Russell 2000 struggling right now, only up 0.1%, up $1.14. You know, there's certain areas of Florida that are just beautiful and gorgeous. And we're going to go talk to Tiger Woods' neighbor, Jack in Jupiter, because that's one of those places out there. Jack, thanks for calling. Thanks for holding. How you doing today?
Doing great. How about you?
I am doing just great. Thanks so much for asking. And You're interested in the IWM, so tell me what you're doing, how I can assist you.
Well, Here's what I'm interested in. I am short the IWM, and the last 2 days, particularly today, it's underperformed. Is it going to play catch-up tomorrow and explode, or is it going to roll over and take the market with it tomorrow?
Well, I'm going to look into my crystal ball.
That's what I want. That's what I want.
It's a little fuzzy, though. But let's take a look at what it is doing. Now, if you've been in the trade for a while and you're just managing the stops, where are you at there?
Yeah, that's pretty much the situation, yes.
Okay, all right. So, if the IWM, when the IWM is leading the market, it's a really great indicator of a rally that's going on. And when it starts to falter out there, it's never going to carry the markets up. So it's not going to lead the markets up that way, but it's a great leading indicator to a lot of liquidity in the markets. And what you're seeing and what you just mentioned is no question a divergence between that and what I see going on in the VIX index right now. The VIX index is trading below the 50-day exponential moving average, and that's a real good sign that there's plenty of liquidity in the marketplace. The VIX is trading at 1268. The 50-day exponential moving average is 1325. So we got a little bit of divergence here. I think you're okay to stay in this trade here, but I just want to make sure that you've got a stop in place. I would say this to you. The answer to your question is the IWM going to participate in this rally in a light volume move on the way up. If it takes out the highs here from August the 11th, I think the answer is yes. I think you would see the IWM move from that 114-ish level up to about the 116 type area. So if it's the IWM, you would have to determine whether that's any kind of pain, that you want to take. I think you also have to really kind of gauge things as to what's going on inside the Qs. If we take a look, and the reason why I mentioned the Qs is because the Qs, Jack, are trading up towards their swing point high out here.
Yes, exactly.
Yeah, and so I think it would be advisable to take a look at both. Let me see if they've actually hit it. The low of the July 24th swing point in the Qs is 96.98, and we've hit today 96.92, so 6 pennies away. Now, volume today, 18 million shares. Heck, yesterday was 27 million shares. This light volume in the Qs at highs are signs of a top. And it's going into 24 million shares, so it's moving into a swing point. Unfortunately for you, it hasn't tested that swing point. So pretty good chance that it will go test that swing point. The reason I say that is because if it closes today above the 96.60 level, it will have closed the gap, and you're at 96.88, and that's that gap that took place on July 31st out there. So, the IWM, it's the place to be if you're short because it is the laggard out there. And I just think you kind of have to watch the two of these to really answer your question. But is there something else that I haven't answered for you, or that you're looking at that we should look at together?
No. You got it. You got it. I was looking at that divergence and wondering if it was showing weakness. I've seen it both ways, where it leads the way, and when it runs out of juice, the market itself begins to turn the other way. But I've also seen it where the following day it'll catch up, and more so when the market moves ahead of it. And I was wondering if you had any sign, any sense. Your VIX comment pretty much makes it clear that it looks to you like it's on the way up.
Yeah, look, the Nasdaq just simply, it's when the market was moving lower, I came on the air and I said, look, it's all going to be about the Nasdaq, because it really hadn't broken down this time. I can tell you that my inclination is that we're going to see some type of at least short-term retracement. Which could be the market setting up, quite frankly, the C point of an A to B equals CD to the upside. But I think just to keep things simple for you, I would say focus on the Qs and that swing point that is trading into, and then focus on the swing point for the IWM. Have your stop in place.
Just above 114 there. I see the swing point there.
Yeah, and I think that's really the best way that you can trade it. I think both you and I have the expectation that it's probably going to move higher, but my crystal ball, your crystal ball, it's a little cloudy with regard to the exact forecast out there. Now, of course, we're coming into a Friday in a summer season. And so, for the market to continue moving higher would be expected. But the IWM's got some problems right now, and I don't know what they are. It should be participating more.
Well, thank you very much. I appreciate it.
You bet. My pleasure. That was you bet. That was Jack in the beautiful city of Jupiter, Florida. He's got all kinds of good neighbors out there, all kinds of great golf courses for sure. Let's go take a look at the indices and see what they're doing out here. And let's start off by taking a look at the S&P 500. We touched on the Qs and the IWM. So let's take a look at the S&P 500 and the Dow first. So if we look at the S&P 500, let's put this thing in perspective. Hopefully you're watching us here on Tiger TV. And what you're going to first notice is I've come back all the way into the November 2012 time frame. And from lower left to upper right, what you can see here is you'll see the diagonal price channel that price has been traveling within. And it's a price channel that's been established since November of 2012. Now we'll go ahead and explode out on this. We'll pull this back quite a ways. And what I want you to notice here about that price channel, and what's so important, is that when the S&P was making its low on Thursday, August 7th, guess where price stopped? Right at the bottom of that price channel. Thursday's action, last week's action, had nothing to do with it. So the price channel is still in there. The rising price channel is still in place. Not much like light sweet crude. We took a look at light sweet crude during the last segment on a weekly basis, and it had broken through its rising price channel. That's never good. Now, light sweet crude needs to come up, test it, and reject that area to say that it absolutely wants to change its trend. In the case here inside the S&P 500, guess what? It hasn't changed its trend. Even if we take a look at this little subcorrection channel or the correction off of the highs here from July 24th, the reality is when we take a look at channel lines, and channel lines are different than trends, and that channel lines are taking a look at the body of the candle. They're using an open or a close. You're trying to identify, 3 or more opens or closes to create your channel line. Well, in the case of the S&P 500, you're going to use the body of the doji candle from July 24th. You're going to use the open of the next session on July 25th. You're going to use the open of the session on July 29th out there, and that becomes a pretty darn good channel line. What we can see here with the S&P 500 today is it has ducked its head above that area. Now, just above it is the 0.618 retracement level, 1958. Has not hit that. It's normal for it to hit that. Even if we use just a trend line, the current trend line, here we would use the actual wick of the candle. The wick or these shadows, whichever is the terminology that you might use. That means we're using the high of July 24th. That means we're using the high of July 29th out there. What we'd have to say is there's a convergence that is about to take place probably tomorrow at that 0.618 retracement level. Why is that important? When markets make that lightning bolt pattern, that A to B equals CD, to the downside or to the upside, you have that first move that sets up your A to B point. Well, we've got that in place, certainly from a volume standpoint, from everything standpoint, from the high of July 24th down to the low of August 7th. Now you've got the potential of a C point being formed. If someone was going to ask you where is price likely to go to in order to form the C point of an A to B equals CD, to the upside or downside, your natural answer should be sweet old, not Alabama, but sweet old 0.618 out there. So, it's what's happened here is the S&P has broken a little descending price channel. It should go test the 0.618 level. It should do that tomorrow, I would think. Now, whether it reverses from there or not, or waits till Monday, or doesn't reverse at all, I don't know. I wish I had that crystal ball. But it is coming up into an area on really light volume. There's no question about that. But remember, volume, folks, is only 1/4 of the entire equation of a set of indicators that you should be using when you're doing any kind of technical analysis on a stock chart. Right now, we've got the Dow. Well, I'm trying to find it. Where is it? We've got the Dow trading up 51, 52 points. S&P's up 7. This is Steve Rhodes and TFNN. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better, a 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability, available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Backtech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom as we go into the close here right now. The Dow's up 53, S&P's up 7. Russell 2000, though, not joining along in the gang. NASDAQ Composite up 16 points. And in the first segment, we had a request to take a look at Lennar. So let's go take a look at that stock chart. That is for Vicky in Bradenton, Florida, out here. She got into Lennar, I think, yesterday. Right now it's up 54 cents, trading out at 37.10. Now, Lennar looks a little bit better than Hovnanian does. If we take a look at the daily action here inside Lennar, up on light volume behind the move so far today, 1.3 million shares out here, getting up a little bit over resistance. Had a little downer day, if you will, on July 31st, but so did the market. This was down with 5 million shares out there. And if we take a look at Lennar, pretty good chance that this is going to head up to about the 3807 area, Vicky, before it runs into resistance. That's its TAS market profile resistance level. So you'd like to be able to see it clear that area. If we take a look at just simply some natural retracements from the high that was out here on July 1st down to the low that was put in on this equity recently back on August the 1st, you'll also see some resistance at the 3838 level. That's your 0.382 retracement. But just make sure you've got a stop in place on this trade somewhere below the August 6th low. That low, by the way, is 35.75. If I pull this back any further, so the one thing that we liked about Hovnanian was it had some nice high volume up at its most recent swing point highs. We don't have that same thing here in Lennar. So you've got a couple of different things that you're looking at out here. But so I like the Hovnanian chart because the high volume swing point high says price ought to be back there at some point in time out here. As long as you keep your stops in place, you should be in pretty good shape out there. So that was for Vicky and Bradenton. We took a look at the S&P 500. Let's go take a look at the Dow, get a feel for what it is doing here in the marketplace right now. Where is it? Right here. As we take a look at the Dow now, remember when we looked at the S&P 500, I went back to the 2012 time frame. Here, I've just taken it back to the same time frame, November 2012, November 16th to be specific. This is a daily chart that we're looking at. Notice the rising price channel inside the Dow. Now, what the Dow actually did was it broke through that price channel. And what typical behavior of a real breakout to the downside is that you'll break a price channel, come back and retest it, and then reject that area. Well, the Dow went ahead and tested it yesterday. And with it being up 52 points or so as we speak right now, guess what? It's back inside the price channel out there. What does that say? That says that the move down, that this descending price channel on the way down, this little subcorrection price channel, it says it was a false breakout. Until we see the Dow get below that channel line out there, the break we have to assume, even though this has been a mild bounce volume-wise and everything. Remember, let me try to put this stock. Let me put this out on my screen here for you. Start from the current slide right there. Here's the trading pyramid. Here's what I think that everybody should take into consideration. If you're a technical trader and you utilize different technical tools, break the trading tools into 4 quadrants, or what I call Stevie's trading pyramid. You want to break it down into a indicator that's going to measure volume, supply, and demand. That could just be volume. It could be a demand index, could be on-balance volume. It could be a money flow index. Those are all great tools. Use one of them. You only need one to take care of your volume aspect of a chart. Take a look at the volatility and liquidity inside what it is that you're trading. Take a look at Bollinger Bands might be one. Keltner channels are popular. Standard deviations like our man Daryl Martin uses all the time. Those are great tools to use to understand volatility and liquidity. Take a look at momentum, a third area. Take a look at a stochastic. Take a look at the relative strength, the commodity channel. Take a look at one of those, the Williams percentage, or any one of those are great tools to take a look at what's going on from a momentum standpoint. And then finally, use that last piece of it, which is the energy and the angle. That could be the A to B equals CD tool. It could be the power law vector indicator if you're fortunate enough to have the art of timing the trade software out there. It could be the Gann swing bands. It could be a MACD. But those are 4 separate elements that measure different aspects of any chart that is out there. It is not just one of these aspects that's going to go ahead and give you the buy signal, sell signal, and so forth. And always be aware of the sideways, the diagonal, the horizontal support and resistance that is out there. You don't have to understand much of technical trading in order to be able to draw channel lines and trend lines out here. And the interesting thing about the Dow is that today it is back inside of its channel line. Now, the real key is on an intraday basis, 120-minute time frame basis, 30-minute time frame basis. Let me take a look at the Dow futures out here. This is the 120-minute time frame. So before we go off the air here, still have a couple of minutes. Let's see what it is doing. It still continues to move higher as we speak right now on less relative strength out there. If there's going to be some weakness, if it's going to show its hands, it'll play out on this chart right here inside of the Dow. It's not going to happen by 4 p.m. That is for sure. And it probably won't happen in the overnight session out there. And I don't know if it will or it won't. Let's just say if it's going to start happening, it probably would kick in around 3 o'clock in the morning when Europe comes online out here. But in the meantime, the U.S. is handing the ball off pretty well to Asia, so expect the Asian markets to likely be up overnight. In fact, if we go take a look at the Asian markets right now, let me see if I can do that in a minute's time. Of course I can. I can do basically anything out here. Let's take a look at the Nikkei. That was up 100 points last night. Let's go see what the Nikkei is trading into right now as far as retracements of its last move down and get a feel for where the Nikkei is likely to go ahead and travel into. So from its recent swing point high to a low, well, the Nikkei may give us the biggest signal out here, right? It's very close to its 0.618 retracement. That would be 15,374 through 15,375. So if the Nikkei gets up to 15,375 and does a U-turn, maybe it'll be setting the mark as to what's going on inside our markets as well out there. So maybe if you're up in the wee hours of the morning, go check out the Nikkei. If it's blasting through 15,375, I don't mean 15,376, but if it's blasting through there, the Nikkei likely to head up to the 15,544 level, and that probably sets the tone as to what might take place inside our marketplace. So, as I mentioned, the VIX index, when I was speaking with Jack in Jupiter, it's now back below its 50-day exponential moving average. That is always in full-out bullish mode, at least for the S&P 500, because it is a measure, or the way that Stevie Son likes to use it here, it's a measure of liquidity. It's below its 0.618 retracement. That says 1184 is probably next up on its level out there. Folks, don't forget, we've got our Tiger Dollar promotion out here. Go to the homepage at TFNN.com. Make 40% on your money, and as long as you're over there, go test drive my newsletter service, Mastering Probability. You can test drive that for the next 30 days. Have a terrific Thursday. Thanks so much for joining me. Don't forget, you can catch my shows in the morning from 9 to 11, and you can tune back in, as I'll be with you for the next hour as well. Have a great Thursday, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows.
Good day, Money Masters and Treasure Hunters. Welcome to the August 14th, terrific Thursday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom. I'm the morning anchor here at the TFNN from 9 to 11 o'clock each and every trading session. Those shows are archived on Channel 9 and Channel 10. It's always a thrill and privilege to sit in for Tom here. I also have a daily newsletter service. It's called Mastering Probability. You can test drive that service for the next 30 days. Just come to the homepage of TFNN.com. Click on my name, The Trader's Edge Show, from 9 o'clock. It'll take you to a landing page. You can test drive that service, and I promise to give you my all during the next hour. That means we're going to take a look at some extraordinary tools to help us identify where price is headed to. We'll utilize A to B equals CD patterns. We'll use Fibonacci retracements and expansions. We'll take a look at Japanese candlestick charting, because the bulls and bears, they got to report to work each and every trading session, and they leave us signals out there. It's an interactive show. Would love to hear from you. Our call number is 800-877. How about that? I was changing the number on us. 877-927-6648. Internationally, it's 727-445-1044. Together, you and I, we can go hunting for bulls and bears. Remember, folks, never be a prisoner of your past. Always be a pioneer of your future. This is TFNN. It is Terrific Thursday. I'm Steve Rhodes, and welcome to the show. We had the Dow close out up 62 points, trade out at 16,713. The S&P closed up 8 and change. It closed at 1955. NASDAQ Composite was up 19 points on the day, closed out at 44.53. Russell 2000 up 1.5 points. The laggard out there, she closed out at 11.43 and change. New York Stock Exchange up 46 points. Let's check in on market breadth out here. We had net advance and issues, a 2-to-1 ratio out there. I don't know the volume behind that. I'll have that this evening. May report on that tomorrow morning during the 9 o'clock show. Gold is a flat trade at 13.14. Silver is flat as well. She's traded 19.88, and light sweet crude is anything but flat. That is back $2.25 right now, trade out at 95.34. In the aftermarket right now, reporting earnings out here. We've got a couple of pops out here. You've got J.C. Penney. J.C. Penney had closed out its trading session. Oops, I just deleted it, so now how do I know? JCP, there we go. J.C. Penney closed out at $9.74. Right now, J.C. Penney is... Well, that's not trading at $70. $10.75. There we go. So it's trading at $10.75. Let's go see what it may be trying to do out here. So J.C. Penney, as we pull this back, J.C. Penney is the 975. First 975 is going to take it about, or 10. What did I say it's trading at? 1068. What am I meaning? 1068. So 1068 is going to take it above its most recent swing point from August the 1st out here. That high was only 978 out there. So $10 is going to give it a run up into it's trading over the November 29, 2013 area. So that takes us back to the downdraft sessions out here and an open gap. And where JCPenney ought to really find some resistance out here is the beginning of the breakdown. I'll go ahead and I'll expand this chart out here so that you can, if you're watching this on Tiger TV, if we take a look at where JCPenney last broke down, you can see the volume picking up here. It was on the trading session. So the breakdown candle, the breakdown session today is September 24th. That's where you'd first look. The low of that candle is $11.88. That is likely the range where JCPenney is going to really begin to run out of steam. The trading session of September 27th, that's your high volume bar to the downside, but it really took place over about 3 trading sessions out there. Also pop into the upside out here as we speak. You've got Nordstrom. I believe it's Nordstrom's. Yeah, Nordstrom, they closed at 68.69. They generated, let's see here, net sales $3.3 billion versus $3.1. Net earnings about the same, $183 million versus $184. Nonetheless, it's trading to the upside. Close at 68.69, trading up a little bit over $1 right now at $70 and change. Let's go see what $70 is going to do here for Nordstrom. $70 is going to take it. It'll take it above its swing point out here from April 4th, 2014. That high is at 64.18. Let me pull this back a little bit further. That's going to take on this swing point. Let's pull this back even further to the left-hand side. Nordstrom's here. Looks like if it trades like this into the session tomorrow morning, trading out at $70, it's going to be taking out a consolidation area. So the consolidation, here's the pattern inside of Nordstrom's. Let me go ahead and I'll turn off a couple of tools to be a little bit easier for you to follow along for me. Give me a moment. We're going to turn that off. We're going to turn that off. We're going to turn this, and one more thing that I want to try to turn off. There we go. Okay. Now, if we take a look at Nordstrom's, what's kind of interesting here, tomorrow will be a telling day for this equity. And the reason is because it's really been in a consolidation range. And that consolidation, the low of it is right here at about the $55 level, $55.34. Hang on, stop that. The top of the what the heck did I just do there? Oh, that's really weird. My apology. Forget about the consolidation. This thing broke out of the consolidation. What the heck was I looking at out there? Okay, let me come back to Nordstrom's out here. Forget about what it does have a consolidation, by the way. It's about a 11.55 to 63. So what is that? About a 8-point consolidation. So 71 was a target. Well, it already hit that 71 level on that high volume day from May 16th out there. So that's that could be a supply line. It's a high volume high. high, $70.71. We'll see what happens when that level gets tested, but that's some pretty juicy volume out there, 8.3 million shares. Let's go take a look at what the markets did out here. Let's take a look at the indexes, give you a feel. Let's go ahead and we'll start off with the Dow. As we were closing out the last segment, we were taking a look at the Dow. We were taking a look at this longer-term rising price channel. That takes us back into November 2012 timeframe. If you're watching us on Tiger TV, what you can see out here is a big movement from lower left to upper right. It's a rising price channel. And when the damage was done, when the damage began being done on July 31st out here, wide-ranging bar, accelerated volume to the downside, price stopped right at the bottom of that price channel. And then what happened? We had 5-6 days worth of action, 5 days worth of action with price moving lower. We had that big turnaround last Friday out here. And today's action, price got back inside the rising price channel. That says the message behind that, whether you like it or not, the message behind it is that price is back inside the channel, that this was a false breakout to the downside. Only if it moves back out of there. I don't expect that it will do that here tomorrow on Friday. Of course, anything can happen. But if we take a look at retracement highs, this is a daily chart for the Dow. We're going from July 17th down to the low out here on August the 7th. You're above the 0.382 retracement. That level was 16,646. You're back inside the rising price channel out here. You have the next level, which is going to be your 0.618 floor, and that's at the 16,839 area. And the very top of where the Dow broke down, the one session, only one really bad session in the market was July 31st, the top of which was 16,869. So I expect that to be an area of resistance out there. That's what's going on inside of the Dow. Inside of the New York Stock Exchange, hey, let's go take a look at the wider swath of the market. Same kind of setup out here, with the exception that the New York Stock Exchange, the even wider swath of the market, the Dow being 30 stocks, the NYSE being like 3,000 stocks out here. Well, price never got down to the bottom of its rising price channel, which is a very solid line as well. That's coming back into this is coming back to the June. Forget about November. Stevie took it all the way back to June of 2012. So even a longer period of time during this last retracement out here, price never made it down to the bottom of its price channel. What did the New York Stock Exchange do today? Got its head above the 0.382 retracement level. Once you get above one floor, price likes to go up to the next floor. That next floor is the 0.618 area. That is at 10,896. That would actually close the gap out there. If we take a look at the NDX 100, let's go see what the NDX 100 did. The NDX 100 closed its gap. That means that old resistance, which never really was tested, that was the low of the breakdown session. Well, the session where it broke down from, which was July 30th. That low was at 39.60. You closed out at 39.69. That window is closed. That no longer really becomes a level of resistance out here. Did the NDX make it up to its high? It did not, but it will. That's where it wants to head to. Probably make at least 100% move and get into the July 24th swing point, at least the low of it, which is 39.7566, perhaps the high 39.9750. The NDX 100, the little engine that could, would, and should go test its swing point highs. This is Tiger Financial News Network. I'm Steve Rhodes. Thanks so much for joining us, folks. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. We've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. We had the Dow finish up 62 points, the S&P up 8, the NASDAQ Composite up 18. And as we do each Thursday at 20 past the hour, we spend time with our man, Basil Chapman. Now, Basil has his own proprietary trading system. It's called the Chapman Wave, and it identifies the rhythm and soul of the market by counting peaks and troughs. It's an extraordinary system. It's one that I use each and every day. You should as well. Basil's also got a great newsletter service called The Opening Call. And he hosts the morning show from 11 to 12, 5 days a week out here. Good afternoon, Basil Chapman. How are you?
Hi, Steve Rhodes. How are you?
Excellent. Thanks so much for asking. You having a nice Thursday?
A very nice Thursday. Thank you. Yes, and we've got a most beautiful day here in Boston.
Ah, excellent, excellent. Yeah, hard to believe. Already August the 14th.
I didn't even want to mention it. But,
okay.
We've got two or 3 weeks of summer left, and that's it.
Okay. That's great. Hey, so what do you see going on in the market here? The Dow is, and I took a look at it during the first break, broke back into a longer-term rising price channel today. If I went back to the 2012 time frame. So what's it doing in the Chapman Wave out here today?
So this is very interesting. What I had identified as one of the most important lows that we've made recently was the 20th low at 16,341 on the Dow. And the chart that I'm showing, for those of you who are looking at this, I'll make it a little bit bigger so you'll see that this is the, every day my subscribers to my opening call get this chart. It's the Dow daily chart with all the different techniques. And it's basically in live time. It's in real time because I show that this is a peak A and this is the cup formation or the arch formation, how the price is moving above the 9-period moving average, in this case the maroon line, and how we use the MACD and the slow stochastic. Now, what's really important is that the May 20th low started a move that went to the 17th of July.
Yes.
The final four phases was a peak on the 9th of June, at 16,970, there was a cup formation and a modestly higher high in 9 sessions at 16,978 on the 20th of June, pulls back and has another cup formation with a modestly higher high at 17,074 on the 3rd of July, 9 sessions later, and it's almost impossible to believe, but it was 9 sessions later, exactly on the 17th of July, that there was a modestly higher high than that, and that was 17,151.
I like those 9s. That's my favorite number.
Oh, it is. Well, isn't that? That's good. Okay, so we got those 9s, 4 of them in a row. And then what happened is that the Dow went from the high of 17,151 to a low of 16,333. That, to me, was not the extraordinary event. The extraordinary event was that we were looking at this, and one of the reasons why we went short the Dow almost at the top was because there was a left side, right side price time match. And that took us from the 20th of May to a candle that I identified, and that was a candle of the 27th of June as an important candle. And I did a measured move from that left side to the right side, and that came out to August the 7th. When was the low? 16,333 was hit on August the 7th.
Yes.
So now, and that was a trough D. In the Chapman wave, peak Ds and trough Ds are where you start to become cautious because it could be a trend of change. Doesn't have to be, but that's often when it happens. Lo and behold, we've had a big move. Now, I've been looking at this and I've been thinking the match, and I actually watched this today was such an important session. Why? Because if there was a very small doji close, that is a tiny candle or a candle that made maybe a fractional new high, but then closed closer to 16,616, that's the 9-period exponential moving average, that maroon line that I'm pointing to right now.
Right.
That would have said that the arch formation, which is a very typical formation when you've had a serious move to the downside, you get this arch formation. The big test comes. Does it pull back more than 50% from the most recent high back to the trough that was made, in this case 16,333? Does it decline under that, or does it just barely decline, or does it move higher? Well, I've also drawn a dashed channel line, and that goes from the low of the 1st of August and the Dow, and it goes right to the price point of the high of 16,627, the high of the 11th of August. And lo and behold, what happens today? We stopped right at that line. But the candle that was formed says to me that from the low that was made on August the 7th at 16,333, we have had 1, 2, 3, 4, 5 sessions, and out of that, only one session was a very modest session. It's a little tiny doji, which barely looks like a down day.
Yeah, it's just sideways day, right?
And I have to now go back to the patterns that were forming from the May low, and I have to say, because the QQQ, that is the NDX 100 trading vehicle, the Power Trust series, because the has acted so strongly, the Qs have acted so strongly, and even though the Dow's been a laggard, the candle today cannot be ruled out as a very important candle. So what I've written, this is already my notation for my subscribers tomorrow, that it was a very good candle today. Yes. And the only way we're going to see a reversal is if there's either a doji candle tomorrow with a sharp move down on Monday below 16,600, or tomorrow there's whatever the news is, who knows, but if there's a very sharp move, because what we're looking at here is this is not what you normally get in a counter trend move of some kind of a low, where by now we should have had at least a second doji candle, if not a black. In this case, I'm using white and black candles. A black candle to the downside.
But so something of indecision. You're looking for some kind of indecision in the marketplace on the counter trend.
And at this particular point, I'm calling for a leg B. And if there's only just a modest down day on tomorrow, and on Monday there's a higher Tuesday, I have to conclude that this is going to go to the Chapman wave buy signal to buy mode. That'll actually take you to a D. If there's a failure and we close under 16,600, then I have to start looking at it and say, okay, now comes the big test. Is it that pattern that I call the lower H? And you know, in the leadership category, it's very interesting because in each category, there are really just a few stocks that are hoisting the market higher, but out of the blue you suddenly get a rotation, and that rotation, we've been looking at rotational corrections since June, July of 2010.
Yes.
And that means corrections to the upside and corrections to the downside. And when I'm looking at the leadership here, I'm seeing a stock like FB's the symbol
Facebook, yeah.
And it's struggling, but it is holding the 9-period moving average, where we happen to be long this. It is holding it very nicely, yet it hasn't had a power move to peak A, B, and leg C like almost every other move to the upside. Yet you get some of the other stocks that are real leadership stocks. So I think it's very selective, but it doesn't matter. The price is the arbiter of a trend, and I have to think that at this particular point we will have further upside action unless there's a minus 80 to minus 100 within the next 2 days in the Dow. And the S&P, it's virtually the same thing, so it would be about a 10 to 12 point decline in the S&P. And that'll say, oops, now we've got to get cautious. But in the meantime, it's still a very selective. You can have longs and you can have shorts in this market.
Absolutely. Basil, thanks so much for that great overview of the Dow and Facebook. We'll look forward to listening in on your show tomorrow morning. Don't forget, folks, every day from 11 to 12 o'clock. Thanks, Basil. Have a great Thursday evening.
Thank you, Steve, and have a great evening.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back to the Tom O'Brien Show, folks. I'm your guest host, Steve Rhodes, filling in for Tom. We had the Dow finish up 62, S&P up 8. Finishing to the downside out here, Red Robin Gourmet Burgers. Totally deep fried. It's the kind of burger you'd want to send back and have them recook it out here. If you own the stock, that's really what you would be asking for too, because this thing here at its, let's see here, Red Robin Gourmet with volume to the downside today. Let's see where this is trading into. The volume today was 3.6 million shares. It's never had 3.6 million shares. Traded back into its last sign of strength out here, so to speak, from a candle perspective, way back in May of 2013 out here. This looks like this may have further downside potential out here. A bit oversold, but I would not be getting in the way of Red Robin Gourmet burgers out there. Excuse me. That's what I think of burgers. I actually don't know if they're any good or not, but boy, the stock has just truly gotten beaten up. And they were to the downside. Let's take a look at what's going on inside some of the sectors. You know, if we take a look at inside the S&P 500 specifically. And we can start off looking at the with inside the XLK. And if we take a look at the top 10 holdings today, struggling was IBM, Google, and Intel and Cisco. To the upside, we had Apple, Microsoft, Verizon, AT&T was up 22 cents. AT&T of the top 10, probably is the largest percentage move to the upside. Let's go see what AT&T was doing out here. Closed out at 34.91. See if there was any kind of volume behind its move. How about that? No real volume behind its move. A counter trend rally for sure. Now, what AT&T does have out here, at some point in time, price does want to move back to this high volume high from July 29th. 92 million shares to the upside. But at first, at this stage here, it has not participated in the rally that we've seen over the past 5-6 days. If you just take a look at retracements as one of the tools for that, from the high to low. not even near the 0.382 retracement level. Let me do that again for you before I deleted it. The 0.382 retracement would be $35.43, closed out at $34.91. That was one of the leaders inside the number one weighted structure with inside of the XLK. Nonetheless, there's some resistance, market profile resistance at $34.99 inside of AT&T. If we take a look at Apple, see what it was doing. Up 0.25%, up 26 pennies out here. Apple moving in towards its swing point highs. It's got some resistance here it's trying to deal with. That downdraft of July 31st inside Apple, much like the market. It was down with 56 million shares, up with 31 yesterday, and today 28 million shares. It has, let's see, the low of the gap, 97.67. The high today, 97.57, off by a dime. Ought to at least go test that level tomorrow. Now, the swing point high's got 43 million shares, so still coming into that level a bit light in the loafers, and that is on Apple. If it can take out that level with more than 43 million shares, that level being 99.44, that'll set up an A to B equals CD to the upside. We'll take a look at that when and if that happens. Cisco down about 2.5% today, off 66 pennies. Let's go see what Cisco was trading into. Cisco closing below a B point with volume of an A to B equals CD to the downside out here. If we take a look at what that pattern then suggests here, your A point inside Cisco going to be this little doji high out on July 22nd. That's your A point. Your B point's going to be August 7th. Your C point's going to be retracement into August 11th. You're off of that C point with conviction meaning wide price spread, accelerated volume. Cisco going to pull back into its gap up, its sign of strength out here. So volume today, 63 million shares. Sign of strength, 120 million shares. We'll find out whether or not Cisco is going to be able to hold this gap. This gap being $24.12. We have seen 3 tests of that area. That should be strong support. If 24.12 fails, and that's really what the signal of today is, but the signal of today is a little bit lighter volume, that sign of strength. Nonetheless, if 24.12 fails, then we ought to see price move back to its breakout area, the bottom of the gap, which is 23.05, or really the bottom of the trading session from May 14th out there at $22.63 out there. So it'll be interesting to watch how Cisco trades. If we take a look at the financial sector out here, the XLF, the number 2 weighting structure with inside the S&P 500. We had everything was mean and green with the exception of American Express. Let's go see what it was doing. Down 13 pennies, not a huge deal out here. Nonetheless, not participating in its rally. American Express, this could be setting up an A to B equals CD, the downside. This is running into resistance here of its last downdraft out here. That took place on the trading session of July 31st. So it has not made it. It's tested the bottom of that July 31st area, which is 87.99. But one of the top 10 weightings inside the financial sector, most certainly not participating. But let's take a look at what is participating. Wells Fargo up about 0.8%. Berkshire B shares out here. Let's take a look at those. The Berkshire A shares trading above 200,000 today. Take a look at Berkshire B up with some nice volume behind the move, 4.4 million shares today. Let's go see what this is trying to do. Looks like an A to B equals CD to the upside. The B point inside Berkshire, the B shares out here is the high from May 2nd, 129.73. Volume of 4 million shares. Price got over it with 3.7, then 2.7, 2.7, 2.8, and today 4.4. So finally up and over with volume. We'll give it the benefit of the doubt out here. The benefit of the doubt says that Berkshire B shares could trade up as high as, let's see here, where's going to be our C point? Is it going to, our C point, we'll take it all the way down here. The 1-to-1 A to B equals CD, about 144.33. That's in the financial sector. Let's take a look at the anything else big in the financial sector out here. Let's look at Goldman Sachs. Not big. Well, big from a weighting structure and big with regard to the Dow out here. So let's go take a look at GS as a ticker symbol. Let's go see what it did. Only traded up 36 cents, 0.25% here as we speak, but not looking too shabby, really, as we take a look at this. It's got some resistance up here at 173.70. The swing point looks like that is from the trading session of July 30th, 2.3 million shares out there. So if it can. Today's volume 1.4, so weak with regard to volume. That is for sure. But still not looking too shabby. Goldman Sachs. Let me see where there's any kind of price damage, volume damage inside of Goldman Sachs. I don't see it, really. I don't see it. Support about 168.97, resistance 173.70. You close above that, it ought to go take on its swing point from July 30th out there. Let's look inside the healthcare sector. The XLV number 3 weighting inside of the S&P 500. Lead the charge percentage-wise. The upside looks like, Gilead Sciences up 2.5% today. Hey, Amgen, even bigger. AMGN is a ticker symbol, up 3.5%, up $4.55 out here. Amgen taking out a swing point, closing above a swing point, doing it with a little bit lighter volume, but that was a swing point high, a high volume swing point, 8.4 million shares on July 30th, and today up and over with 6.3 million shares. That looks pretty good. Let's pull this back. Looks like that could be an A to B. Yeah, that's absolutely an A to B equals CD. The upside on the daily chart. That took place on that trading session of July 30th when the B point was taken out with volume. The larger A to B equals CD to the upside inside of Amgen. That gives us a price target out here of approximately... There we go. There's our B point is the trading session of April the 28th. 1-to-1. A to B equals C D. That lightning bolt pattern says 143.01. I'd have to argue more likely 152 is in the cards eventually for Amgen. If we take a look at... let's see, Monster. We're back to Monster Energy. Monster Energy, apparently that is popping in the pre-market out there. Thank you, our man David White, Polar, our wingman here in the second hour here for the Tom O'Brien Show. Monster Energy. I used to trade this equity back in the 2006 timeframe. It went underneath a different name or symbol back then. Right now it is MNST. The reason why I say that is I was in the equity when the last time the rumors, which never panned out, was when Coca-Cola was considering buying them out. Nonetheless, apparently Coca-Cola is going to expand the Monster distributorship with a net cash payment of $2.15 billion. Monster closing out at $71.65, trading out at $88 right now. Let's see what this is going to do. A huge pop out here. Let me go see. It looks like the it's not the 5-hour energy drink company, but it does have one heck of a nice move. Let's see if this is going to put it up towards all-time swing point highs. Yeah, here's your all-time swing point high back in April of 2012, and that level is $83.96 in the pre-market. It's trading out at $88.60 out there. This is Steve Rhodes. This is Tiger Financial News Network. Thanks so much for being here, folks. We'll be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks. Steve Rhodes here, filling in for Tom. And to talk about commodities with Andy Hecht coming up next, getting clobbered, getting the kibosh out here has been light sweet crude down $2 and a change out here right now, trading out at 95.45 was the last trade out there. You know, if we take a look at Goldilocks and silver, light sweet crude, we'll go back. We will take a look at the futures market just to give you an idea as to where things are at. But if we take a look at gold, the concerning thing for gold, this is interesting here. If we take a look at the last 5, 2, 4, 6 trading sessions right now, Very narrow-bodied, small-ranging bars out here. The range, not so much. Small-bodied candles out there. Never the sign of a market that has a lot of energy out here. Nonetheless, it's trading at the 13, 14 level, right into its market profile resistance area on the daily contract out here. But really interesting. Maybe the next buy is around the $12.99 area, but a break at $12.99, and then we ought to see gold move lower out here. Silver also, let's see, silver here, I believe having several days of nothing but narrow-bodied candles out here, still really in full bearish configuration. Its market profile level right around the 1986 area, trading right now at 1989. So not a lot of enthusiasm there, at least not just yet. Now, with regard to light sweet crude, well, a whole different story. It's got an A to B equals CD to the downside right now that it's trying to, well, it has completed the 1-to-1. The next level, the next floor is 93.90. That'd be your 1 to 2 A to B equals CD to the downside, and that is in a light sweet crude. Let's go take a look at the futures market. Let's try to get a feel for what might be going on here. Let's take a look at the S&P specifically as we speak right now. Let me pull up the, let's just switch over to all of them. Let's switch over to the daily charts out here. If we take a look, we'll start with the S&P 500. What do we know about the S&P 500? Well, in the futures market, you had from the last Friday was a key reversal session. Let me get rid of the retracement level. We'll come back in there. So this candle session right here, as the market was making a low and price was traveling with inside this little descending price channel out here. These are the red diagonal lines on my screen. We also had a key reversal trading session, and that was on the trading session of last Friday out there. And key reversal sessions oftentimes mark lows or highs. Right now you've got price trading above its descending price channel, so it's broken out of the lower price. If we take a look at retracements from high to low out here, it's above the 0.618 retracement level as we speak, 1949.27. That says, hey, 1965 would be next in its cards out here. If it ducks down below the 1940.65 level, which is your market profile resistance, you may have some trouble out there. Let's go to Mike in Oakland, California. Mike, thanks for calling. Thanks for holding. How you doing this afternoon?
Steve, how you doing?
Excellent, excellent. You want to look at the GDX, I believe. Tell us, tell me what you're doing and how I can assist you out here. Are you long?
No, I'm just looking at the daily.
Okay.
So we have the 2 days before, and the RSI is 100 on the 12th.
You've got, you're looking at a daily chart?
Yes.
The 12th of, I'm trying to, June?
No, just 2 days ago.
2 days ago. So I've got an RSI read in the 60s.
I guess I'm looking at something different then.
Yeah. Well, I'm using the 14 period. You may have it set to something a little bit different than that.
The 3.
Okay. You've
in
got
terms
the 3
of the
period.
momentum indicator.
Got it. Okay. All right.
Okay. So you see it there, it's 100 a few days ago?
It'd take me a bit to switch over to a 3 period. But keep going. I'll get there. Go ahead.
Okay. So the next day, it hits a higher high, it looks like, but the RSI turned down to about 95. For a sell signal, would you have gone with the 12th or the 13th? In terms of closing today, I mean, or get more at all.
Okay, so now what I'm going to need to do here is actually pull up a different chart. So let me do that. Let me see if I can do that for us. And so if you're looking for the Rhodes momentum indicator signals, the question is there anything in here that would have given us a signal to possibly go short the GDX? Let's take a look at that. Give me a moment here to try to pop that up onto the screen. See what kind of template I've got out here. So give me a moment here. I'm almost there. So as I take a look at the...
I should have told him I wanted to talk about the...
You should have, yeah. Okay, so no signal whatsoever on a daily chart for the GDX to suggest going short. as I take a look at it. Now, this chart here doesn't have today's action in it. So let me see. The close was today at 27.13, and you would have needed to see it close below 27.07 just to get into the cautionary zone out here.
Okay, so, because that day it was 100%.
Yeah, and the percentages aren't going to concern me as much as the candle marking out there. And so that date of August 13th is really on the daily basis, the candle session that you're looking at. Mm-hmm. And you need to see price actually close below the low of that 27.07
right,
to start entering into a cautionary zone. You'd really have to see it close below the session from August the 1st to then start to move yourself into a sell type of a zone out here. Now, that's not to say that there's not some resistance out here, because there is. The trading session on July 11th, big old bearish engulfing candle, looks like also a key reversal session. That's really the hurdle that the GDX is trying to get over. So it is struggling out there. You've got some sellers, you got some folks that were taking profits, and that level is at 27.78 out there. But I don't see the short setup here right now, and what it would be also best to do would be to go take a look at the maybe the top 10 equities with inside the GDX, and you can download that. You can get that if you hunt and peck on the web, and I would take a look at what those top 10 holdings are doing out here. But at this stage, it looks pretty bullish to me.
Could you look at the diamonds for a second on the daily?
Yeah, absolutely. All right, so we got Lucy in the Sky with diamonds, yeah.
Yeah, so we have on the 7th, I'm looking at that day as a possible buy day if it closes above that high at 164.89.
Which it did. It did on August the 8th, absolutely.
But would you have been keying off of a few days before that on the 1st?
I would have used August 7th. August 7th was absolutely the day to use out there, Mike.
All right. You answered my question.
You bet. Thanks so much for calling. Folks, stay tuned. Our man, Andy Heck, he's going to be up next. Don't forget, we've got a great Tiger Dollar promotion going on. Make 40% on your money, and tune in tomorrow morning. Hotel California check-in time is 8 a.m. when John Logan kicks us off. Take care, folks.